What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today, BTC USD. Hit that like button, subscribe, and thank you all for being here. It is the 9th day of March. And here we are sitting at about $68.2 thousand with 10 hours, 38 minutes left in the day. Hit that like button. Thank you all for being here. Where we're finding support, it's kind of odd, right? It's not so odd, but if you're using these diagonal trend lines, this didn't really help you out much. Maybe you were expecting that we'd come down here to find support, right? It's a possibility. We could still find a higher low. I've been saying really since this high that as long as we're above 66K, that we're okay. We did pierce 66K barely. And again, the market makers this whole time, they've been very screwy. It's like once you get right to these points where things start to change their structure, where the directional heading starts to shift from a price perspective, that's whenever we flip the script, right? It's like as soon as you broke below these points of support, that's where we reverse. As soon as you broke this point of resistance, that's where we reverse. I'm not the only person. I've actually listened to a few YouTubers and people on X recently say that 66K needed to hold as well, that 66K was an important level. I think it's very obvious as to why. But it's less obvious on this chart, I think, than it is on another chart that we have, right? We've got the BTC USD chart here. It is Monday. And on Mondays, I think it's a really good time to look up our Bitcoin CME futures chart. And I made a post about this yesterday when we were at 66.7K, showing that we had the CME gap down, and we were also finding wicking support here on this trend line, right? The CME chart, sometimes, and oddly enough, it can be a little bit more of a clear image than the BTC USD chart, in my experience. That's something that I've noticed time and time again. You know, it's not the most perfect thing, and I don't think that you should just use the CME chart, and don't solely rely on gaps, but they are pretty reliable. And we filled this gap, we've moved up, we have found support at these lows, right? It's very good structure here on the CME chart. And that's why I made this post, because I thought we were going to bounce. I noticed that a lot of people were panicking down here. A lot of people were getting very fearful and calling for prices that were going to go lower. I mean, from what I could tell, a lot of the analysts that I follow were calling for prices that were below 60K. And it's possible. Anything's possible. You know, with this Iran-United States conflict going on, I don't want to weigh in on that too much, but I have my own thoughts. I'm not trying to belittle the situation. It's very serious. People are dying. War is never a good thing, right? Unless you're combating forces of evil, right? I'll use an example, and it's not a real example. This is from the Lord of the Rings, right? War is not a good thing, but it's good that, you know, the forces of men and elves and dwarves fought back against the forces of Mordor, right? It's good that they went to war because, you know, sometimes it's unfortunate, but it needs to happen. Most of the time, war is not for such righteous reasons. It's for very barbaric and humanistic reasons that are not righteous at all. But I'm not trying to get into philosophy. I'm not trying to get into politics. All I'm trying to say, with that leading up to it, is that I don't think that this Iran-United States conflict is going to spill over and cause drama and trouble for the rest of the world like I think a lot of people are expecting. The media is blowing it up, and they always blow things up, and they don't run off of informing you guys. They don't run off of informing us. They don't want us to be the most informed. They want us to be the most engaged. That's how they make their money. That's how they warp your brain, and that's how they control you, is not by informing you. They don't want to help you, right? The information they give is not meant to help. It's to spin a narrative. It's to paint things a certain way. And right now, just as it was with Russia-Ukraine, they're trying to say that it's going to promote World War III. This is going to be a lot worse before it gets better, stuff like that. And it's like, I said the same thing back then. And granted that the Russia-Ukraine conflict has gone on longer than I expected, but it definitely did not spill over into the rest of the world. You had people screaming from the top of their lungs that it would cause World War III. No, it hasn't. It wasn't as big of a deal. It's still a big deal. It's a very big deal. But it's not as big of a deal as people were making it out to be, as the media was making it out to be. Same thing with this Iran-United States conflict. I don't think it's, I think, I give it 2 weeks. At the most, 2 months. Not before it's over, maybe, but before people move on from caring, right? It's just going to be something else. And the reality is, Iran has been at war with Israel since before probably any of us watching this have been born. Like that's probably, I don't care if you're 60. Like it's It's nothing new. The United States protecting Israel and having Israel's back, it's nothing new, okay? It's nothing new. And people are making this out. We can go down the rabbit hole on conspiracies. I'm not trying to talk politics here, okay? This is crypto. I'm trying to give a reason, though, a rationale as to why people were freaking out, again, at the lows, and what really drives that fear home to make you think that you're going to go lower, whenever very clearly we're at a point where we're going to find support. The media is not there to help you. It's there to charge you emotionally, psychologically. It's there to charge you. To when I say charge you, I mean like not like as a fee. I mean like when you're being charged, like I don't know, like ions, like from an energy standpoint. They're giving you a negative charge. Anyways, 68.5K. Let's move on from all my delusional conspiracy, or not even conspiracy, but just my own personal beliefs. I can be wrong. But I wasn't wrong about this, right? With the Iran stuff going on, with all the fear in the markets, with the fact that we sold off in the same week that we pumped. Guess what? It's the same thing here. We sold off on this day that we pumped, and it was still a higher low. I was bearish down here. I didn't fall for it again. Fool me once, shame on you. Fool me twice. As that one guy would say, still shame on you, bro. I trusted you twice, and you still... But no, we're not going to get fooled twice. BTC, USD filled the gap here, and guess what? There's another gap up here. Now, let me educate some of you guys on the gaps. I'm not the most experted person, but I have eyeballs. So let's go over it real quick, okay? Let's just see here. Where have my little gaps gone? Let's see. Is this... Yeah, this is a good one, for example. This is actually a really good one, for example. The gap started here. This is where the daily close was. Okay? We gapped down. We didn't fill the gap. Okay? But whenever we did come up and fill the gap, it was here. We did not fill the gap all the way. Notice that. We did not fill the gap all the way. This is important. And still, that was sufficient enough of a gap filling to then reject and come back down. We went down all this way without filling that gap fully, right? So just so we understand, there was a gap here. We did partially fill it, but we did not fully fill it. And that's the thing. You don't need to fully fill these gaps. It's more common to fully fill them, but sometimes we partially fill them. It's not uncommon at all. Here, where am I? Why am I? Okay. We got to go down lower. Here we have a gap. And technically, you know, from this opening price here, we did come up and partially fill it, technically. But there's still a large gap between this wick here and this wick here and the body. Of course, there's a huge gap here. I like to go by bodies as far as gaps go, right? The wicks for filling can make sense, but the body for the open to close, that's the gap right there, for all intents and purposes. Some people might look at it as this is the gap right here, and maybe. I like to look at it as this is the gap that we formed right here, right? From an opening price here to a closing price here, that's the gap that we have. I don't believe that we're going to come up and fill this gap all the way. We're not going to come up to this level. But I do believe that we will get a partial gap fill. And that level right here, right above this high, guess what? That's at $80,000, which again, I've been saying since the beginning of February that I don't believe we're going to get above $80,000 for the entirety of 2026. And if we do get above it, maybe oh so slightly, there is a scenario where we could go between 80 to 85K, okay? But as we approach 80K, our potential, our momentum, our resistance, right? The momentum and potential dies, the resistance grows dramatically, okay? And let's look at that without looking at the CME gaps, without looking at the CME chart, just looking at this here from a strict price perspective on the 24/7 BTC USD chart. Right there is our prior point of support. We are in a bear market. I gave you guys, I think, a really good video yesterday outlining why we are certainly very near the lows. We are certainly very near the end. We can go over that real quick. I'm going to pull up a different chart because I don't want to lose my place in this one, okay? In case you missed it. In case you didn't see, because it was a little bit later in that video that we got to it, right? We look at the 2-week time frame. We look at the RSI. Every bear market low we've had has revolved around these low points here where the 2-week RSI comes down and we find a crux. This was literally the bear market low. This was literally the bear market low. This was not the bear market low, but we still, whoops. Oh, okay. All right, I got to zoom in a little bit, I guess. We still were at a low point, right? We were here at 17, 18K, and we moved sideways and went lower. The only difference here is we go back to these cycles where we found the low right at that crux. We moved sideways after the low. We moved sideways after the low for months, both times. We had a crab market, a little bit of a sideways market for months, right? A quarter of a year or more. Here, we moved sideways first, and then we found our low. Okay, does that sound familiar? Because that's exactly what I'm calling for here, is that we're probably going to just be moving sideways, and then we'll find our low. And our low, I said it yesterday confidently, I don't believe we go below 50K. If we do go below 50K, it will likely be oh so barely. Like I'm talking like 48K, like very, very barely. And I'm expecting this consolidation phase to last going into, I mean, it might be going into June. It might even be going into July that we're still in this consolidation phase. Now, I think we'll be at the top. We'll probably start moving down in that time, but the low that we're going to achieve, I'm assuming, will be in August. So there's a lot of information I just threw at you there, right? For one, we're showing the same low signals that we've shown every cycle for the last, like since 2015, okay? This might not be the absolute low. It certainly wasn't last cycle, but it was pretty damn close, and I don't think anybody cared if you bought at 19K, if you bought at 25K, or if you bought at 16K, right? You're a genius for buying anywhere in that zone, okay? It's the same concept here, okay? But here we moved sideways. Here, before the bull market started, we moved sideways. Here, we moved sideways, right? We have not really moved sideways at all yet. We've got bear markets end with a bang and then a whimper. Typically, that's how it is. We don't have the whimper yet. We're going to be whimpering for a little while now, okay? Where was I going with this? Oh, yes. On top of that, if we look back at our last bear market, let's just do this real quick. We'll go on the daily time frame because I think it'll be a little bit better. A little bit more coherent, maybe. I don't know what word I want to use. We look at this move down, right? You had a very large move down. We moved sideways, okay? Very similar to what we did here in November to February. We moved sideways. And then whenever we moved down, we had a very small phase of consolidation here, which I think a lot of people are comparing to what we're doing now, and that's why a lot of people are expecting that we're going to drop through the floor. I don't think it's going to be like that at all. I can be wrong. I've been wrong before. I'll be wrong again. But the important relationship here is that whenever you came up, where did you find resistance? It wasn't at these prior lows at all. It was just below them. Does that sound familiar? Hey, look at that, right? Not at that prior low, but just below them, right? Maybe right here where we found resistance before. Everybody's going to think we're getting above 80K, but we don't even make it that far. It kind of matches what I'm saying there. That's just one example. Okay. We have our low here, and we have our sideways consolidation phase. This high, yet again, just came shy of that low. We didn't interact with it at all. In fact, by the time that we did interact with this low, the bear market was over, and we were starting a new craze. We were going through the bull market, guys. That doesn't mean, and that's just one cycle. That doesn't mean that we can't go above this line. We can. I highly doubt that if we go above this line that we'll go too far above this line. 85K will provide resistance because, you know, we have these prior areas of support here. Also, the gap, the CME gap itself is basically at 84K, so I would think once that gap fills, we're ready to move back down. At the highest, maybe we go to 85, 84K, but I'm calling for us to not even go above 80K. I've been saying that since February. I don't know how much sense that makes, but it makes sense to me. And with how we're moving, this is also something that I've been saying. I don't think that we're going to move up. I don't think that we're going to move down. We are going to move sideways. Here we moved sideways. We still had higher highs, but we were moving sideways. Here we were moving sideways. We still had lower lows and lower highs, but we were moving sideways. Okay. It's very boring. We're at the same prices for like months on end, right? My thought here is we could even go lower, and still come back up and move higher, right? We can still do this. And even once we find the high, that doesn't mean that we're dropping through the floor. We're going to be moving sideways, you guys, for quite some time. And then, inevitably, then we will break down and break through. And I believe, again, our bear market low will come in sometime in July, August, or September of this year. I'm calling for August. It could be July. It might be sooner. I don't think it'll be sooner than July, but I just mean sooner than August. It could be. It's possible. It's completely possible that this is the low. Again, on the 2-week dynamic here, whenever we look at our RSI, 2 out of 3 of these bottoms right here on the RSI, that was the bear market low. 2 out of 3 of these bottoms that came in with the oversold zone, even this bottom here, the way that it reacted, bear market low, bear market low, bear market low, months before the bear market low, but still in that area. Every time we moved sideways though, right? So whether we've done what we did last cycle, where we move sideways first and then we find our low, our slightly lower low, or we're doing what we've done every single cycle where this is our low and we're just now moving sideways, whatever, however you want it to be. But likely nothing exciting is really going to happen. The most exciting thing that we're going to get from here is about a $10,000 move. And again, this is not going to happen overnight. This is going to take time. We're not going anywhere fast, guys. We're not going anywhere, and we're not going anywhere fast. That's for damn sure. We're going to be range bound at the very damn minimum, I think, until June. Yesterday I was saying April, May. I'm going to cut it out. I don't think April, May. I don't think that we're going to sell in May and go away. I don't think we're going to sell in April and go away. I think it will be June, sell in June, go away. And we will slowly bleed. And then once we get below these levels here, that's whenever, we're going to have our high, wherever it is, right there, just below 80K, just above 80K, whatever. We'll get right above 80K and prove me wrong, because I said that we wouldn't go above 80K, we wouldn't go above this low. We'll get right above there. We'll slowly come down, right? Maybe it'll be a sudden shift, and then we move sideways like this. We had a sudden shift, and then we moved sideways, whatever. And then slowly come down to our low point. Once we get to this low point here, that's when the sudden shift will happen. It'll be super scary. We'll linger down here. People are going to fully expect that we go lower, and then we never do. We never do. And we might not even recover that fast. But I'm expecting that sometime in July, August, September, that will be when we're at our low points. Let's talk about the short-term stuff real quick, and then we'll wrap this up. Okay, 1 hour time frame. We're moving up, not a whole lot of volume. I don't think it's necessarily a requirement that we have a whole lot of volume here. I mean, the volume is greater than what we saw on Saturday. It's about the same what we were seeing yesterday on Sunday, but hey, we're moving up. That's fine. It's the 13th hour of the day. Oh yeah, I wonder. The stock, because of daylight savings, I think the stock market opens now. It was opening on the 14th, the 15th hour of the day. Now I think it opens on the 14th hour of the day, right? Because it was 6, now it's 7. It would have been 6, now it's 7. No, it did open on the 14th hour of the day. Now it opens. I'm doing this wrong in my head. Hold on, I'm trying. Time math is always so weird, man. Right now it's the 1300th hour. For me, it's 7:40 in the morning. But before the time change, it would have been 6:40 in the morning. So then, but the UTC this time stays the same. So it's still, even if it was before the time change 6:30, it's still the 1300th hour. Right? So 1300 at 6, it would be 1400 at 7. So 1400th hour was when the stock market opens. The 14th, okay, because this doesn't change, of course, it would still be the 1400th hour. So 1400th hour, 14 and a half, 8:30 now is whenever the stock market opens. I had to work that out through my head. I think that when the stock market opens, we will get some volatility. There is a scenario, even though that this video might seem super bullish, it's not like incredibly bullish. All I'm bragging about is the fact that we were right here, that we were calling for the move up. Now that we moved up, we can move back down. We can move back down, and that's what I was going to get to at the 1 hour time frame, right? We don't have to see incredible volume. We don't need it yet necessarily. We can move up, but the whole thought in yesterday's video was that we broke through this trend line, right? We've got everybody bearish. We haven't seen any recovery yet. And the thought was, what does this recovery look like? Is it going to be partial? Do we find resistance and come back down? If so, then yeah, maybe we do come back down to these lows. I don't think that we go below 60K. Maybe we do, maybe we don't. But I think we'll come back down to the lower ends of this range. If it's a little bit more robust and we can get above these points of resistance and support here, then maybe we stand to grow above this area here. But I don't expect it to be a straight shot, right? It'll be volatile. It'll throw you off. That's probably what's going to happen. We're in volatile and uncertain times geopolitically. We look at the 1 hour time frame again. Yesterday, the thought was we're going to move up. We're going to see some recovery. But what is the extent of that recovery? To what extent are we going to get? This could be it. We're at prior points of resistance here. We're at prior points of resistance here. This could be it. If we look at this on a high to a low, let's just see. I mean, we're right at the 382. There's nothing wrong with finding resistance here. The thing is, too, we might find resistance and still be building. We could go to the 236 and then come up just because we move down from here, just because the stock market opens in about an hour and maybe it opens up to the downside. It doesn't mean that we're going to go below this low necessarily. We could find resistance here, find support at the 236, and then continue to move up. That's a very standard procedure. 382, 236, and then up to the golden ratio. It's a very, very standard procedure. The question is, can we get above the golden ratio? The question is, can we hold prices above 66K? If we get above the golden ratio, we're probably going to take out this high. Again, not immediately, but just over time. If we get below 66K, we're probably going to take out this low and make our way back down toward, but not below, 60K. That's my thoughts. If we go below 60K, I bet we barely go below 60K. It's not going to be a long-lived or a deep endeavor there. Okay, we're not seeing the real move down at this point in time. That's not my expectation. I could be wrong. I've been wrong before. The 1 hour RSI, in my opinion, looks really promising here. It looks really promising. It looks pretty damn good. We had severe bullish divergence playing out from this. The divergence has played out entirely. But we're getting to the point where we're about to get overbought. The overbought zone is where the magic happens, right? When we got overbought here, we were moving up already. But once we got overbought, that's when the magic happened. Once we got overbought here, that's when the magic happened. So we're at this point where the big move might happen. And again, things typically shift around the time of the stock market open. When I say shift, that doesn't mean a sudden shift up. It doesn't mean a sudden shift down. It means one or the other, right? It's one or the other. We will likely see that happen. The stochastics are coming up out of the overbought zone here. That's nice to see. MACD is crossing above the zero. That's also nice to see. I'm not too amazed by it, but it is the 1 hour time frame. You know, it's not that impressive in itself. 1 hour or the 4 hour time frame here, the RSI, every time since the beginning of February, basically since you guys, we've been in this consolidation range. Every time that the RSI has been here in these areas, we have found support every single time. Where we find resistance every single time has been around or even above into the overbought zone. We're not there yet. But again, this goes with the idea that maybe we do push up higher. But if we're up here, we find resistance. That could be the point at which we come down and we see a lower low. But not before we get this lower high. We could come up here, find resistance, get this lower high, come down, find a higher low, and later break through that, right? It's not just because we find resistance below this high doesn't mean that we're going lower. I don't expect, well, all I'm trying to say here is I don't expect that we're just going to move up like we did here. I don't expect that. I do believe it'll be a little bit more volatile, and I believe it's going to take time because, again, the main name of the game here is we're just doing this until June, okay? And I don't expect it to be straight down, straight up the whole time. It'll be worked for. And then once you get to the highs, it'll be worked for to get down to your lows. And then it'll be worked back up for to get to your highs. It's, you know, it took us a very long time, for example, to go from here to here, where here it didn't take us long at all. I don't expect movements like this. I expect movements like this until June. I'm done repeating myself. Let's move on. Stochastics look bullish. The MACD looks bullish. Why do they look bullish? Well, you're overbought on the stochastics. That's good. The MACD has bullish divergence. We just flipped green. That's good. The RSI bouncing off the same areas it's bounced from every single time we've been at the low points in this consolidation phase, and it's a higher low. That is, say it with me, good. It is good. Yes, right? Put both hands up in the air. It's good. We look at the low to high here. We bounced right off our golden ratio zone. I did say yesterday that I had a bit of an issue with the fact that we went to the golden ratio and we rejected the 0.5. That's not normally good. That normally incriminates that you go to the 786, 886, but we found support still in our golden ratio zone, right at the 6.9, as is pretty common to do, actually. And here we are, making headway. Now we're above a point that we found resistance. This is productive. This is productive. If we can get above the 236, I think that is going to be a very significant level, at least based off these fibs. A lot of people are focusing on 70K, and I get it. I get why. Of course you'd focus on 70K. There's prior points of clear resistance here and there. And it's a psychological number, right? It's a very rounded number. It makes sense. But I'll tell you what, the 236 matters more. I wouldn't be surprised if we did this. We get right above the 70K level. Maybe we even hit the 236, and then we find resistance and we come down. I wouldn't be surprised if that happens at all. We do get above the 70K level, and then as soon as we do that, that's when we come down. Mark my words, 71.2K is more important than 70K right now. We get above that on a 4-hour closing basis, 2 candles in a row. Likely then that would directly imply that we will go above this high. Until then, we're in this wait and see environment. And the waiting and seeing that we're doing is we're waiting to see how productive this move is. Because again, even though we're expecting the move to come up, we could, depending on how we react here, be at this exact same price in less than a day and then expect us to go below this low. Things can change quickly depending on how we do this or how we don't do this. But this certainly looks bullish here for now. I doubt that we stop here. We're probably going to keep moving up. Daily time frame, looking at this, right? We're at the very beginning of a week. Actually, it's a brand new week. 6 days, 11 hours left. The expectation was that we would move up in the beginning of this week, and that's exactly what we're doing. We're moving up in the beginning of this week. Weekly time frame. Oh, it's because we're on the index. Okay. The daily time frame here, we're finding support. We're moving up. We've got a nice little upward sloping trend here in our RSI, right? Just like that. It's beautiful. Higher lows, connecting the dots right there. Perfect. Higher highs. We likely continue to persist with this trend until we get overbought. And then maybe we start to correct and we come down. We'll either get just barely overbought like this or we will reject the overbought zone. I highly doubt that we're going to see readings like this, which that would be phenomenal if we did. We're going to be at 100K by the end of April, you guys, if we do stuff like that, but probably not. That's probably not what's going to happen. It's going to be more like this or like this, where we get a sudden, quick little shift up there and then we'll come back down. Let's actually look at that real quick, just so we know what we're looking to anticipate here, okay? Okay. The last like 3 times. Even this attempt here, this could be a good example of what we're going to do as well. Even that, right? This here was at a relative high, and we moved down pretty slowly, slower than we moved up, but still pretty slowly. We moved up, or we found resistance here. We were at a high point and we moved down a little bit faster than we moved up, but we still moved down. It was a higher low. Here we found resistance and we moved down. I'm not caring about the higher highs, lower highs thing. That's not what I'm going for. I'm just saying at these points directly, what did? We found resistance. Here we found resistance. Here we found resistance. Once we get up here, say it with me, we're gonna find some turbulence. Yes, it will be rejectable up there. The MACD finding support down here, we're probably going to come back up to this 0 line too. Wouldn't it make all the sense in the world that, hey, this is where we found resistance before? Right there at the same place in the RSI. The RSI gets overbought. The MACD is going to be right around that 0. Perfect area to find resistance. The stochastics will be overbought. Same concept, y'all. Same concept. And just because we find resistance and we're up here or right here or higher or wherever, doesn't mean that from there we're going to the depths. We still have time on our side. We are still going to be consolidating for a very long time. I thoroughly believe that this is one of the most opportunistic moments in your lifetime to buy Bitcoin and various other cryptos. So definitely be doing that, right? I mean, we look at this again on the 2-week time frame. It's clear as day what's going on here. I think the 2-week time frame might be our new best friend whenever it comes to RSI analysis. You'll go down as a legend in the next bull cycle for buying at these prices. I don't care that we're up 5% today. I don't care that we're up $10,000 from the recent low at 60K. You'll go down as a legend for buying at these prices. And with that being said, I thoroughly expect we will see lower lows. I think those lower lows will happen in July, August, September, and I believe that we find personally the bear market low in August. Q4 might be exciting. I still don't believe we're going to be at 100K by the end of Q4. I don't think we'll see 100K. I don't even know if we'll see prices above 80K for the rest of this year. But it's going to be exciting. It's going to be exciting. The end of the year will be exciting. Right now, we're in the boring time, guys. It's going to be very boring for most of this year. The excitement that's going to come in first will be to the downside, but that will be in Q3. And then the exciting bit to the upside will be in Q4. And 2027 is looking very, very good, well postured for the kickoff of our next bull market. There is one more thing I want to do. And if you've stuck around for this, this will be a little treat for you, I suppose. Man, I don't really have much time. I don't know if I should do this. I'm going to just real quick. When is the next halving? It's expected to be in April of 2028. Okay? April of 2028. Normally it happens a little bit earlier than what they're expecting. So I bet it's like March, February, something like that, okay, of 2028 normally. Because what happens is whatever the algorithms are right now, the difficulty, people create better mining capabilities, things, kind of happen a little bit faster than expected. Even if the difficulty goes up and counteracts that, we still move a little bit faster normally than expected. If it's not April, then it's May, but likely I would say March. We'll see, right? They say the halvings are every 4 years, but it's never been directly every 4 years that it's happened, right? The first halving was in November of 2012, for example, right? The last halving was in April. It's not a perfect 4-year cycle as far as the halvings go, but roughly, right? Roughly over time. Anyways, April 2028. I want to do this real quick and then finish, okay? I'm going to finish all over the charts here. Let's see. April, somewhere in here. We'll probably say early April. It was April 20th last cycle. It'll probably be early April, if not likely March or something, okay? I'm actually, because I believe that, I'm actually going to take it even a little bit further. I'm going to take it back here. It matters, all right? Technical analysis, let's get technical, okay? And then let's just do, we're not going to do, I guess we can do every halving in existence. I think I still remember them. I used to have it down like the back of my hand. Let's go to the very first halving, which was, I want to say it was November 28th, 2012. I'm pretty sure that would have been this week here. Okay. The next halving was July 9th, 2016, I believe. The next halving after that was May 20th, right? May 11th. It was May 11th in 2020. It was May 11th or May 10th. I want to say it was May 11th, though. Could have been May 10th. So if I'm off by a week, whatever. And it's really off by a day, but by the way of this, it would be a week. And then our last halving, of course, was in April. It was April 20th. It would have been this week here. Okay, so there's our halvings. Again, you can see them. They are pretty evenly spaced, right? Pretty evenly spaced. Here's what we're going to do. From this halving point, where was our bear market low? From this halving, and obviously not this low. That was the crab market low. That was before we kicked off the bull market, but that was the low of the bear market there. Let's see. Hold on. Am I right on? I need to get right. There we go. Right on it. The bear market low is here. The bear market low was here. Come on. Right there. And then here, the bear market low is here. So from each of these halvings, we've gone back and we've marked the end of the bear market, okay? 54 weeks, 77 weeks, 73 weeks, 75 weeks. I don't know about you guys, but I think we found the outlier, and I think we found the commonality, the range, the similar expectations that we should probably carry forward going here, okay? So using our imaginations, the halving might be in late March, April, maybe early March, whatever. We're not perfect with this. It's not going to be perfect, but it's an assumption nonetheless. 73 to 77 weeks. Does that seem fair to you? 73 to 77 weeks. When might the end of the bear market be then? Well, actually, damn, that would imply March of 2028 at the earliest. Wait, oh no, I'm sorry. Here's March of 2028. That's where I was like, how is it March of 2028? I thought we went back. 77 weeks would be October of this year at the earliest. October of this year at the earliest, and then 73 weeks would be November at the latest. So October to November being the prophesied low of the bear market. based off of this form of analysis. Okay. I'm still sticking with August, but if I'm wrong and it's not the Q3 low that we have, it could be Q4. It is possible. And going off the data, that makes more sense. But if we kind of put this into August, like I think we're going to be, let's put it like right in the heart of August. Maybe the halving doesn't happen at the end of March. Maybe it happens sometime in February, and in which case this still fits within that range. Maybe it doesn't happen in February, but it happens in the beginning of March, and 81 bars is still pretty damn close to 77, right? It's still all within a rough range, a rough estimate of things that are acceptable. I doubt that we're going to see exactly 77 weeks, 73 weeks, 75 weeks before the next halving happens that we find our low. It'll probably be something different. It wouldn't be too crazy to assume that it would be within this range, but it's also, because we only have 3 iterations, not too crazy to assume that it could be outside the range as well. I'm sticking with August, but here's a good counter argument to why it could be in Q4. Either way, it's not going to be an exciting year, and we're likely only going to pick up some excitement to the downside this year, not to the upside. I got nothing else for you. I hope you enjoyed the video. I got to go. Hit the like button, subscribe. Take care. Bye-bye.